It is a very good Friday indeed. The markets might be closed in TradFi, but crypto never sleeps. And we're going to be discussing that and much more today on Money Never Sleeps. Thanks for joining us today, everybody. As we get going, you know the drill. Give us a like, subscribe to the channel, and remember, nothing that Kevin or I say is financial advice. So please do your own research when it comes to any financial decisions. Kevin, we got some inflation data today. We got Powell talking out of his ass today. It should be an interesting one. We can keep it brief. Really boring week in the markets overall. You know, we're at the weekly close, the monthly close, the quarterly close. Where are you focused right now? How do you want to take things today?
Yeah, I mean, let's just start with the PCE data and all the shit Paul was saying, and then we can talk a little bit about the currency crisis, crypto, SBF, and then we could wrap it up with some BTFP stuff, but nothing too crazy. Super low volume week, and that could be a good or a bad thing, right? We could say that's the holiday week, that's the end of the quarter, people really don't want to do anything, but at the same time, we also know that if there's low volume and the volume isn't pushing the price up, that could be a bit of a warning sign. Maybe gold is telling us that right now, but from the PCE data, looked like it came in as expected, right? It was no real surprise at all. I think more of the surprise came from what Powell had to say. I don't have any of the data pulled up right now. Do you happen to have it?
I have numbers in front of right now. So
Cool.
personal income came in at 0.3%. That was slightly below expectation. Spending came in really high at 0.8% increase month over month, well over the 0.2% last month and the 0.5% expected. The headline PCE number came in at 0.3%, which was under the 0.4% from previous month and the expectation. The year over year was 2.5%. So slightly up compared to last month. And if we look at core, the Fed's preferred number, we're still at 2.8% year over year, 0.3% month over month. So nothing too surprising. We didn't have TradFi to look at today. It's being closed with Good Friday, but we did have crypto. Crypto markets are down a little bit. I think we are seeing a bit of rebalancing across the board as we head to the monthly and quarterly close. The dollar is, pretty flat on the day. I know you had said, and on the week as well. I know you said it had seen some movement earlier on when we saw that data initially, but nothing really too crazy there. I will say the spending is looking pretty strong. People are still racking up that credit card debt. We didn't do a show yesterday, but Q4 GDP, they revised it higher to 3.4%. So the markets are running, the economy is looking strong. And then Powell came out today, and I would like you to go ahead and read that quote from his remarks earlier this morning.
Definitely. And I think the thing with GDP too that we were looking at is the wrong thing. Again, spending being up. It's because maybe the price of things are going up as well. People can't afford it. But the important thing is also gross domestic income, which we'll talk about next week. You don't need to get into it today. But this is something that Paul said today. And I got this pulled up from Finance Lot. Maybe this is out of context. Maybe. Who knows? But what this says is the decisions the Fed makes doesn't have an impact on the American economy. Jerome Powell, 1:20 p.m., March 29th. Save it, bookmark it, screenshot it. Because this is something that's going to bite, I think, him in the ass in the history books. Because what the fuck does that even mean? What do we have these rate hikes for the past 2 years for then?
Yeah,
Absolutely confused.
I'm not the sharpest economic mind out there, so maybe someone smarter than myself can explain it to me. But last I checked, the Fed controls interest rates, and the interest rates do have a decent impact on the economy. So ipso facto, I don't know what the fuck he's talking about.
Yeah, man, it's so I mean, again, he's a very confusing person. He
Also,
says
the John C. Riley gift choice was
perfect.
fantastic, like absolutely perfect. That was my
Couldn't have been
response when you read that quote to me.
It was. I vividly remember it 5 minutes ago. But this is some of the funny shit that also came out here. It's not possible to rule a recession out. Okay. double speak here. We're saying one thing, meaning another. There was one other thing that he had said. Maybe Finance Lot doesn't have it up here, but he said that the American economy is still strong despite the current rate hikes, meaning that regardless of how high the rates have been, they can stay this high because the American economy is resilient to them. Is it now? We got to talk about the labor market, right? I think the labor market's the one thing that he says, well, no, the data is coming back that there's still plenty of jobs out there, right? We know that hours worked is coming down significantly. That's a huge problem. Wages can go up, but that's inflationary. But if the hours working, that people work come down, that's a problem. That shows you that we're seeing full-time jobs become part-time jobs for a lot of people. And this is the one thing that the Philly Fed actually said yesterday that's, kind of contradicting the Fed at in the BLS. Philadelphia Fed says current US payrolls overstated by at least 800K. So you're telling me that with all these hikes and all this data that's coming out, these numbers are supposedly, and they're just making this accusation inaccurate. We've been railing off data that's not true for the past 6 months. That's a problem. And again, that shows you that we are in this bubble, in this lie, this point where we haven't seen any type of healthy correction in the market, let alone we're also seeing the labor market actually worse off than we were anticipating. What are we doing here? We're just creating more debt, we're racking up debt, and at some point, there has to be a cutoff, and it's just getting worse and worse by the day. It's getting worse and worse every time we see that the labor data is coming in stronger than expected. Is it though? That's the question we have to ask. And again, we won't necessarily know the data for a while, probably till after there's actually a recession to see what it really was. But it seems like if the Philly Fed is saying something bad about the U.S. current, the current state of the U.S. job market, and then we're also seeing contractions in the Chicago Fed in terms of their manufacturing district. We're getting two different stories on the state level as opposed to the federal level. So I don't know if we can take Paul's word at face value anymore. I don't think we ever could, to be honest with you.
Yeah, I I don't know, man. I would love to get more context on that, but it seems like a pretty asinine statement. Let's go ahead and talk international for a minute. I know that we have a lot going on in the weeks ahead, especially over in Asia. We were discussing, before we started recording, some of the currency concerns in China, Japan. Why don't you dive into those? How you think they could potentially impact the U.S. markets as well?
Absolutely. Let me just pull up this article. So we got two problems in Asia right now. We got China and Japan, very different situations, right? We got China that's has rates so elevated to the point that they're in a somewhat disinflationary. I won't say the actual word, but they're pretty much in a place where the people are unemployed and they are trying to inject liquidity into the market in order to keep equity up. But the problem is in Asia, the other part of Asia, which is Japan, they are very close to currency intervention because the equity market is just rallying so high. So in China, they're trying to inject money to save a failing equity market, and then in Japan, you have an equity market that just is hitting all-time highs nonstop. The height of in the past 35, almost 40 years, and the yen keeps losing value each time the equity market goes up. Now, why is this a problem? We know this is a problem for a few reasons. We talked about it the other day. There's two ways you can get your currency stronger. More exports in your currency, which means that people are going to need your currency. So the yuan, in that case, would get stronger if they were exporting more. The other way is to have your equity market pull back because people believe that maybe the value is in, the currency. It's the value for the time being is going to be in treasury bonds. But the Bank of Japan says that they're open to all ideas. Specifically, I think it was Suzuki, that was his name, says that they were open to all ideas when it comes to intervening in the currency. Now, this is a problem because this is a situation where if they decide to let that market go, kind of stop injecting liquidity into the Japanese market, and a lot of people realize that, okay, maybe this is the top, you could start seeing a lot of outflows in the equity markets in Japan, and you would see a lot of people flow into the yen. And this is a really weird situation because this could cause equity markets globally to start pulling back significantly too, because if those equity markets pull back and you start seeing the yen gain strength, then a lot of people are either going to do one of two things. They're going to move into their own treasury bills because they can kind of assume that, okay, the second largest currency in the world is having problems. People are, flocking into it, maybe we should start to selling off at the top too. And we say we're a very frothy equity market right now in the US as well. So the problems in Asia can cause the yen to start skyrocketing, meaning that they intervene and the yen starts getting really strong. But at the same time, the dollar can go strong with it. So there's a really scary scenario where the yen and the dollar can rally together here. And that's something that we should be, keeping an eye on, because if that's the case, that means the equity markets are probably gonna fall through. So those are the two ways we can see that kind of resolved in Asia. But the problem is, every time they intervene, it always marks the end of equity markets doing whatever they're doing at the time being, meaning rallying like crazy. I think the dollar, if we can pull up the dollar right now, because what happened this week is very important. And there was a tweet by Game of Trades. We sometimes cover them, I think, on here, but I disagree with what they were saying, that the dollar is going to find resistance here. I don't see the dollar finding resistance. Oh, damn it. I shared the wrong screen. I got like 15 screens up here. I got to find
I know you do.
DXY. There it is.
There you
There
go.
it is. This is the daily. If we look back at this on the DXY, you could see that since the height in 2022, we've been following this trend line, hitting it, resistance, right? Resistance once, twice, 3 times, 4 times, 5, 6, 7. On the eighth time, while we're on the daily right now, about to get a golden cross, come Monday open, we're above this line for the first time, and we're getting consistent daily closes above it. Now, the important one was the weekly. Weekly closed above it. That's the first time we've gotten a weekly close above it at all. I mean, that's a really big move. That tells me that, okay, this is kind of a triangle pattern where it's just coiling up, and we're going to probably see a leg up from here. But what does that entail? It means that there's probably going to be problems with a lot of these other currencies and these equity markets, where we could see a lot of people flock into just US dollar. The problem for Asia right now, and I think China in general, when we look at their currencies, is that this thing is just nonstop. They've injected too much liquidity, and they're trying to save the equity market, but by doing that, they created inflation, and their dollar is becoming somewhat worthless. We can see that the higher this goes, the worse it is for China and Chinese citizens. And same thing with Japan. The higher this goes, the worse it is for its citizens. That's inflationary, and it's also devaluing their currency. So everything is going to become extremely problematic and expensive. That's kind of the stagflationary scenario you could see in Asia, where, people are not making nearly as much, but the price around them is going up, and we're starting to see, obviously, unemployment rise. That's a very big problem. So we could see stagflation in Asia if that were to continue, but I do think that something is going to break, and I do think that the Bank of Japan is going to make a move. And the worst case scenario, obviously, would be yen starts skyrocketing, and so does the US dollar.
Okay. Anything else on that front? I know next week, looking ahead, we have a lot of jobs data coming in, which what can we even get from that anymore with these constant revisions?
Fingers crossed it's the truth.
We're going to get all this jobs data. And at the same time, we have a ton of Fed speakers across the board, starting Monday, going all the way through Friday. We have about a dozen different people from the Fed who are going to be talking. Will the jobs data be in their favor? What are they going to say? That is going to be really important for the markets. And I don't know, man, it seems like a lot of things are coming together to set us up for a summer dump, I guess you could say. We're going to take a big old dump in the summer. We have everything you just discussed with Asia and how that often spells the end to equity rallies. We have the Bitcoin halving coming up here in the next month. What is that going to mean later on? We have the typical summer lull of very low volumes, people selling in May and going away. Now, what I struggle with here is so many people, once again, are talking about these things. Is it really going to come to fruition if everyone's expecting it? I keep in touch with quite a few financial advisors, and they're all planning for a potential, dip in the summer. So has that already been I don't want to say priced in, but too much preparation for that? Are they waiting for this to happen and it never comes? I don't know. This is where trying to play these markets is a really fun game of chess, but it's going to be interesting. It's going to be a very, this quarter overall, let's pull up, since it's the end of the month, our last show of the month, last show of the quarter, let's round it out by kind of looking at the monthly and how Q1 has played out. And maybe, maybe we scroll back to prior years and look at what we've seen, before the Bitcoin halving or in election years. Like, let's spend the next 5 minutes. We'll keep it short today, but let's kind of look at the charts here and see if there's anything we can glean from previous markets or
Look
previous
at
periods of time.
TradFi or crypto.
Yeah, let's start with TradFi.
All right, cool. So yeah, I mean, where we are right now, this is the past 3 months. We see that we've rallied just the S&P from the low to the high, 12%. So that's a really good quarter. That's usually what you get in a given year, right? In a normal year, you would see about a 12% rally. However, this has been extremely violent to the upside this quarter, and then even prior to that, Q4 of that year, of last year, was an insane rally. Now let's look back to see in prior years if we've gotten anything like that, and if we got a pullback. Looking at it, obviously there are different scenarios, right? This is all QE. This is all when rates were at 0% and we had a ton of money coming in. So that's an anomaly. We can't necessarily look at that. If you look here, February 2019, you had a pretty good dump. It's about almost 7% pullback after having, probably about 10% or so moving up from here. So the thing that's really important to see is how far away we've gotten from the 50 moving average since the COVID pandemic, right? Now, looking here in 2016, 2017, you can see that it's like a slow grind. We didn't necessarily tap into this 50 moving average, but you eventually did, right? That's the thing that I think is really important to remember. And when you did, it was roughly 10% pullback there, 6% pullback there, almost 7, and so you're seeing these good retracements. We haven't seen that at all. So that's something that we have to keep in mind. That 50 moving average should be tested at some point. Look at the stochastic RSI. We're down at 196 on the monthly close. And let's pull up the Bollinger Bands just for fun. Not seeing anything too crazy on the monthly. And again, the monthly is not the one that we want to see. We want to see more on the weekly and see how it is. But to say on the weekly, these are kind of closing in, and that's not necessarily a great thing. Again, 50 moving at the stochastic RSI down here, or 100 and 100. And even worse on top of that on the weekly, and this is something that we're talking about, volumes are going down as price is going up. Now, is that important? Yes, it is. It shows you that there's not a lot of money flowing in. And that could mean that low volume leads to high volume, but it's not going to be a green candle of volume. It could be a pretty good red candle. Let me see if I can find any places in history where it's been like that before. Let's see where we got a good dump. Yeah, a little bit right here. So you're starting to see volume come down here in February 2020 as it's happening. Next thing you know, you get some really high volume. And of course, it's red, right? People bought it back there. So the setup that we're seeing on the monthly and on the weekly kind of tell me that we have the perfect conditions to see a pullback. I'm not going to say when it's going to happen, but it seems like we are getting really close to being exhausted up here. I mean, the same can be said for the NASDAQ. The NASDAQ, again, I don't think is in the situation any different than where we were back here in 1999, 2000. The only difference is obviously there's a lot more money at play. There's a lot more companies that are, being valued here, but we are very far away from the 50 moving average. Even this pullback that we got from, in 2021 all the way to 2022, this is a really good move to the downside. That's what, 37%. And eventually you found that 50 moving average. Let's say we do test that 50 moving average once again, because very similarly, we're in a really similar position in terms of the stochastic RSI and how overbought everything is and how far away we are from the 50 moving average. Down to the 50 moving average, that puts us down about 28%. So that's a pretty good move that we could see get there. Will it get there? Who knows? I'm not going to say it's going to happen, but conditions once again are right for a pullback, and we have to see where that support holds. Could it just go to 16? Yeah, absolutely. But we'll have to see how things are playing, and if there's any problems in the market that could potentially get us there. And I think you and I both agree that there is one stock that could potentially get us there, and that's something that looks like this, right? Nvidia and all these other stocks that are just mania shooting straight up. If they're weighted heavily in these indexes and they start to tank because there's no support built on here and they start moving fast, you're going to start seeing a lot of people flow out of these equities and go straight into cash because they aren't necessarily sure where to move. So that's what I'm seeing on these monthly closes. I mean, again, another monthly close for Nvidia where it's green. It's been green it only had 2 red months, and those 2 red months, it's such a small percentage in which it traded and then it rallied up. This was a little bit of a correction that allowed it to keep going up. Now, the only difference is volumes are going up as the price is going up. That's signaling to me that's no different than some of these other crazy rallied stocks that we saw back in 2000. And again, you're seeing more volume to the upside is because people are covering their positions. A lot of people lost money shorting this thing on, throughout these past few months. And even worse is that at some point we're going to start to see the volumes kind of top out. Maybe it's next month, maybe it's this month, maybe we get a flat month, maybe we get even a decrease next month. But that would kind of tell me that, hey, maybe there is a chance that we are seeing a lot less capital flow in. That could also be, conditions perfect for a pullback. Again, last time we tested the 50 moving average for NVIDIA from the height, the 67% move to the downside there. How far away are we from the 50 moving average from the current price? We're about 65%. So roughly in the same ballpark. Not going to say it's going to happen in 1 month or anything like that, but there's a problem when you go too fast, too quick with something. It could pull back pretty significantly over a period of time, even a shorter period of time if the conditions are perfect. Now, that's pretty much all I really want to cover in TradFi because the Dow, again, is no different than everything else, right? It just keeps climbing. It's going to have to pull back at some point. The Russell is just putting in a bit of a new high, but this is new high as opposed to where it's been for the past 2 years. But again, very similar situation. 190, 50 moving averages right there. You're getting a little bit overextended from it. Probably going to test it. If you don't hold it and you don't hold support here, you're coming down to the 200. So that's what we're seeing on the monthly, right? They're all bullish closes. However, there is definitely conditions that kind of suggest that we could see a bumpy few months ahead. And I kind of agree with that summer pain that could be coming. Now let's pull up Bitcoin because Bitcoin had kind of the craziest month, I guess. I mean, it's up 13% this month.
Less than last month. Last month was nuts. Like overall, so far this year, Bitcoin is up about 64%. I want to say. I just looked at the chart, but I mean, another good month overall. Yeah, for sure.
Absolutely. Yeah, I mean, let's put it this way. I still cannot make heads or tails, and this is Binance 100%. This is Binance using USDT. That should be the top traded pair for crypto. These volumes just fell the fuck off. You're getting more selling and buying volume down here at the FTX lows than you are at this mania rally up here. That's something that we always question. I still question to this day. It doesn't make a whole lot of sense. However, the price continues to push up. And again, I mean, it doesn't make logical sense. I know why it's doing this, but the question is, what purpose does it serve to have the price this far up? And if there is a bit of a sell-off, what happens to this price off of low volume that pushed it all the way up here? What happens when you get a red volume day like what we saw back here in FTX and the price was only down say 16% in 1 month, right? What happens if you get that in the way down with high volume? It's going to be very interesting to see next few months. But let's see. I'm going to pull up this on the daily now just because we're on Bitcoin. And we can take a look at this too. This is not a good look either. This looks like we're putting in a lower high. Do I think it could go up and get a double top? Yes, I definitely do. I think 74K is that range that we want to look at. Let me just pull this up on Coinbase. We got the parallel channel there. I wanted to tap this white line once again. And then if we zoom out on this, eventually it's going to have to come down and test this line once again because we got extended from it. We came up pretty fast. If we look at this on the weekly, pulling this up, slow internet. There we go. On the weekly, we shot up very fast, right? It looks like NVIDIA's candle. You're going to have to come back down. You're so overextended to the point where the 50 moving average is about $30,000 below where the current price is sitting. That's insane. That is absolutely insane. But the last time that the price was that high and it got rejected at that level, it did come down to the 50 moving average. It did the same thing back here. So at the very least, we could look for a pullback maybe in the next, 6 months. And I'm being very conservative with my estimates because I don't want to be caught off sides and thinking that, oh no, it's going to happen in 2 weeks, 3 weeks that we're going to get a pullback that bad. I say in the next 6 months, you're going to at least come back, touch the 50 moving average. It's about a 40% drop. Kind of lines up with what we talk about with the halving. Always mean that 40% drop. We haven't gotten it yet. Maybe the 50 moving average is the next level of major support we have to test. But when we do test the 50 moving average, you can see that sometimes, it doesn't hold. It didn't hold in 2021 into 2022, right? That's going to be the big question. Does it hold here? Do people have enough money to are they able to afford holding these assets if these bills come due, if they get unemployed, right? These are the things that we're going to have to question. it's going to be very interesting to see how even the ETFs themselves, how people react if Bitcoin does go below 50K, right? And it's like, well, I bought it 60. Shit, you can't really do too much with it. I can't sell it if the price is going down. I got to wait till Monday open in order to offload some of this. So it's a very complicated situation. When we look at this on the monthly and the weekly, the conditions are perfect across the board for there to be pain. Again, even just this volume here that we're talking about on the weekly. So I'm very, very much cautious when I look at this across the board. Even let's look at the monthly close on total 3, and then we could wrap it up. Just pull this up. Man, my internet is slow as shit right now. This monthly
God bless
close.
you, Comcast.
Actually, no, I finally switched. But
Okay.
This is 20. I had to, but I think it's just, I don't know, man. They're all terrible. 27% that we shot up on the monthly for total 3. Alts shot up that much, right? But we're at 100 and 100 on the stochastic RSI. We're still at a lower high. So you would have to kind of hope that there is more money that's going to push in to get us to this up here, or even break higher than it, so that we don't go lower than we did back in the FTX low back in November, December 2022. I don't know how much more capital there is out there for retail to come in. I have retailers talking about retail coming in. That's a problem. That's a problem in itself, hoping that other people come in to buy your fucking bags. I can't guarantee that, but again, I think we're maxing out here. I'm not saying we are, but I definitely think that it seems like if it were to push up higher, you would need absolutely QE to kick in and just massive inflation to start soaring to the point where everyone's just all in crypto. Here though, I don't know.
We can wrap it up there. We can wrap it up there. That's plenty that we've gone through. It's been a wild first quarter. It's looking like Solana is up almost 50% this month alone. That's been one of the big winners of the year. So that's pretty wild. If we look at it from the lows, they got SBF, 25 years. We'll see how much he serves. I'm sure people will be betting how much time he's actually going to serve. I give it like 5. I give it like 5 years. He still has enough. People forget about it by then. He'll be on his best behavior. He'll be, just making sure that everyone forgets all about it and greasing the right hands. So I give it 5 years, and then he's back out, onto his next wonderful venture.
They're sending a message, right? We know CZ's got his trial in April, or sentencing, I should say, in April. They're sending a message. His crime's arguably a little bit worse than FTX, allegedly. So we'll see how that plays out. But then again, it's sending a message to all of crypto that the U.S. government is going to be on top of you regardless of where you are in the world, right? They'll find you. They're going to take all the bad actors out, and it's going to be a very different market, I think, after this cycle does end. But that's all I got on that. I don't want to get too deep into Binance or any of that bullshit right now.
Hey, we will leave it on that note. Thank you, everybody, for joining us. We'll be back next week. If you haven't yet, like, subscribe, comment, all that good stuff. Have an awesome weekend. Enjoy the holiday if you celebrate it. Stay safe in the markets, and we will see you next time.
Take care, everyone.